Okay, the price of gold went up in 2024, right? Okay, here to tell us what this means about your investments, President of Wilsey Asset Management, Brent Wilsey. Brent, good morning.
Good morning.
So tell us about gold in 2024.
Well, it was a good year for gold in 2024. I mean, it started the year on $2,040, I almost said per share, as per ounce. Ended the year at $2,624. So that's a nice gain, about 28%. But there's a thing in the investment world called recency bias. And because you think it went up last year, it's going to keep going up. And gold is very tough because there's no earnings, there's no dividends. It's just a piece of metal. So it's hard to say what's going to happen. The big question is, will it go up in 2025? So far it is. It's up a little bit. But what moves gold? Supposedly inflation makes gold go up. Oh, inflation's going up, I better go buy gold. Well, it went up in 2024, inflation went down, so it didn't work that way. And many times gold is bought for a hedge for fear. We did have, the wars around the world in 2024, which maybe they could be pulling back this year, but that's what generally drives gold, is supposedly inflation, which is not really true. And then also you have the fear of things collapsing, which people buy gold for.
What drives the price of gold?
That's a good question. There's nothing really that you can say really drives the price of gold. There's some things that they say, well, this does, declining interest rates. But no, we had declining interest rates last year. Gold still went up. So it's really the demand, and that's the hard part. What causes demand to buy gold? Because it's just a piece of metal. There's only so much of it, so people buy it. Pushes the price up. Now, I don't see any big gold gains in 2025. I don't see why it would go down or why it would go up. We have to remember too that China and India, the last few years, they bought a lot of gold. I think it was like 1,000 metric tons of gold. That's a lot of gold. Yeah. Keep in mind, it's measured in ounces, not tons.
Right.
They're sitting on a lot with profits. They might say, you know what, let's take some profits. Well, if they take some profits and they start selling, that's going to put more supply in the market, could drive down the price of gold. And again, we see no major inflation for 2025. We say stable interest rates in 2025, maybe bouncing around from 4.5 to 5.25 for the 10-year Treasury. So there's just no reason for gold to go really up dramatically or down dramatically.
How much gold, I don't know if you know this or not, but how much gold does the United States government take? Because we see that they've got that big structure, what is it called, a Fort Ord or something?
Fort Knox.
Fort Knox, there you go, Fort Knox. Right, Fort Knox. Yeah, yeah, okay. But that is a very heavily fortified, and yes. I've seen a documentary they take you in there, and I don't know how much gold that is, but the governments, you brought up China, the U.S. government would want to stockpile a lot of gold. Why?
Good question, why? And there's been talk about that, and I know last time President Trump was in office, he talked about selling it off because we don't really need it. It's not that safety hedge. I believe Fort Knox has about $400 billion of gold, approximately, depending on the price. So there's quite a bit there. Sure. And does it do anything? It gives you that safety hedge. Remember, years ago, the dollar was backed by the gold standard, but that is gone. So gold really doesn't serve any purpose for the government. And I guess when you have a $36 trillion debt, $400 billion doesn't seem like a whole lot to do much for you.
I watch TV and they got these commercials on. I buy all my gold from this. What's the best way to buy gold? And are these guys on the up and up we're watching on TV, or is it how does that work? Or how should we buy? How would you recommend we buy gold?
Well, first of all, I don't recommend you buy gold because you don't really know what the value of it is. When I invest in something, I want to invest where I know that I'm buying it on sale, there's earnings, there's some reason for buying it. But some people say, well, I'll put 5% of my money in gold just as a hedge. Well, that means you give up to buy something else. You may have passed up that good investment that was up 70%. What a retailer last year up 70%. So I'm not for gold, but if you want to do it, you insist on it, a few ways you can do it. One, you get it through stocks. Companies like Newmont Mining and stuff that mine gold, mutual funds, they have those. ETFs, the best ETF is a gold ETF called GLD that really tracks the price of gold pretty good. You won't pay much commissions on that at all, which is important because certain ways you buy gold, like if you do the gold bars and the gold coins, Costco does have gold bars, which you can buy, I think, very inexpensively. But when you turn around and sell out of them, there's a problem. The commission to sell that can be as high as 10% to sell the gold bars. And keep in mind, it's not on the profits, it's on the value of the bar. So if you had like last year, like about a 35% profit last year, you did a 10% commission, not on the profit, but on the gold, your return fell to 21%. And then you had to pay tax on the 21%. So your 35% gain went down to maybe a 15% gain after commission and taxes. So, and gold coins is another one. I hear a lot of people trying to buy gold coins. There's certain tax situations on that. I mean, it really is very complicated. If you really have to buy gold, I think the best thing to do is buy the ETF, GLD. All these other things sound pretty good, but they're so complicated. High commissions, taxation on them. I would say stay away from it.
Okay, appreciate it. That's good to know. All right, Brent Wilsey, Wilsey Asset Management, smartinvesting2000.com.
That's the website, yes, thank you.
All right, thank you. Well, Santa Ana winds are going to return to San